on the South Side on 96.1 FM. Check it out. Business 1110 now 24 hours a day on 96.1 FM.
The following program, paid for by Right Path Real Estate, does not necessarily represent the views or opinions of the staff, management, or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Tom Perry. Get the answer to your question that's keeping you from taking action and succeeding today.
Is Jason still going to office here?
You know we're live on Facebook, right?
Hey.
Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Tom Perry.
Hot mics.
Hey, welcome to the show. Right Path Real Estate Radio, 713-785-1817. 1817. That's 713-785-1817. What I'd like to do right now is open up the show to my good friend Jennifer Hernandez. Jennifer, Legacy Mutual Mortgage. I need to put the background up. Sorry. There we go. The Hernandez team, jennifer.legacymutual.com, 713-579-3600. So what's new in the world of lending?
Well, we were hitting on it a little bit before we got on, but, there's a lot of rate compression out there, so I wanted to just maybe go through some questions when you are looking for a lender.
What does that mean, rate compression? That's an industry lingo term, right?
It is.
Yeah.
So there's a lot of competition out there. There's a lot of margins, a lot of pressure with lenders to cut cost, keep costs low, to keep rates low. Obviously, as rates are going up, there's more psychology in, oh my gosh, rates are going up, I'm not going to buy. So as everybody should, everybody's shopping for a loan, right?
Yeah, so as rates are historically a year ago, what were they?
A year ago, the 30-year fixed for a primary purchase residence, not investment, was it was in the high threes. It was a percent lower than where it is now.
High threes. Now it's in the high fours. Mm-hmm. So what happens is in the high threes, if you got high threes, low fours, competition, like everything's so low, really doesn't matter that much, right? But as it creeps up, people, now that it's high fours, they want to get low or high threes. That's not available anywhere out there. So it's like, who can give me the closest to that a year ago, right?
So it's available with points. You can buy down. So
right.
just some terminology, I guess some questions to ask a lender, whether you're buying a primary, whether you're an investor, whether you're a realtor advising your clients.
Yes.
In the absence of value, price always wins. So you guys experience on the Houston house buyer side, someone could choose XYZ company because, they're giving me the lowest rate. Mm-hmm. It's not their fault. Credit unions are notorious for it. It's not their only business model, right? So you might have someone helping originate that loan that doesn't have the experience. They do car loans and they do boat loans and motorcycle loans and whatever, but do they really know the ins and outs of the mortgage and the qualifying and the Fannie Mae guidelines? And then 2 weeks before closing, made a mistake on that.
Yeah.
And that happens with some of the big online lenders too. So online, too big to fail, without naming any names, they're out there, right? So you get an originator that's advising the client and giving a pre-approval letter on terms that really might not, when it gets to underwriting, is it really the way that it's going to be? Well, no, then all these things appear and this Pandora box opens. And then I had someone from one of the big 3 banks, I won't name a name, but we saved a deal a couple weeks ago, and it was the lender said, I made a mistake in calculating. You don't approve for 150. It's 98,000.
Yeah, right.
And it's like it was literally like a week before closing. Like, the underwriter just kind of slashed what you qualify for. Well, he didn't do his due diligence in the beginning.
So is there no liability on that terms sheet that they get on the front end? Is there no?
You would think that there is.
Yeah, but there's not.
No, because there's on any kind of pre-approval letter, you put enough in there to give you an out.
Yeah, that says
any
subject to
final underwriting approval. Well, they could come up with anything.
Right, sure.
So really, it's the integrity. It's so easy to open up a letter. It's called Microsoft Word.
Yeah, right.
And you type it up.
Sure.
And it's very generic. And even the online stuff that people get, you put all your stuff in online and then, oh my God, I got a pre-approval in
Sure,
like
right.
5 minutes
Yep.
or 5 seconds or
Right.
whatever it is. But if no one,
Yeah, because there's just an algorithm that's written that, assuming that you're being completely honest and transparent, this is what you're approved for,
Yeah.
right? But the devil's in the details.
That's right.
And there's a lot of things that either the person doesn't know to share, or they're given best case scenario, or let's say they make $70,000 in their job, but it's a base salary of, let's say, 55, and they're bringing in an extra 15 on overtime, for example. Well, they think that they're making 70 because they've been making overtime for the last year and a half. Overtime goes forever and ever, right?
No, yeah.
And mortgage companies think in 30-year time horizons. So they don't worry about what's the last year look like.
Right.
They worry about what's the next 30 years going to look like, right?
That's right.
And so it doesn't all count the same. I know about lenders with no, yeah, Daniel says, I know about lenders with no integrity. Right.
Thanks, Daniel.
Yeah. Well, okay, so as a seller of houses, we flip a lot of houses, and
Yeah.
we refer a ton of business to you guys. So what should we, as a seller of a house, getting offers and not being experienced in the mortgage business like you are, what should we be looking? Because the outs for a buyer, for the buyer, I accept a contract, we negotiate all that. Then I go, whew, okay, good, the house is sold, right? Now I know I can start calculating what my
Count the
profit is,
money,
right?
yeah.
And I can't negotiate. I can't raise the price after I accept the offer. But the next chance that the buyer has to negotiate again is during the option period, and almost every buyer does. They negotiate that during the option. There's all kinds of stuff that's not up to code. Maybe you fix those things. Like right now, we've got a house that we know that we didn't do anything with any of the windows. All the windows were existing, and so there's one of the windows in the bathroom that looks out onto a patio, and it's not safety glass. Now, it's not really, you can't really, it's about as far as from here to Andy's computer desk, right? Mm-hmm. So you can't get to it easy. I can't say that that's a safety hazard, but it showed up. Oh my God, it's not safety glass. And so the buyer wants us to change that out. I'm like, no, we didn't do anything with that. So now they could cancel based on that, because they can cancel for any reason during the option period. Well, the second time that they can cancel is when it gets down to if they don't qualify their certain rates. Is like they've got to be able to qualify for a 5% loan or whatever, whatever the number is that they plug in. That gives them an out, and they get their earnest money's not really hard if they get out according to financing. And you've seen deals kick out for all different kinds of mortgage reasons.
All different kinds of reasons. It has to be in that financing period, obviously.
At what point in time do you pass, like the one that a week before closing, they say, oh, you don't qualify for this. That really hoses. Is that outside of that financing period?
It was outside of the financing period. And I think what happens is when you're in the transaction, things are moving so fast and you have so many interests that it's triage, right? That they're just like, we just got to get through this. No one's thinking like, oh, I'm going to take this to the state and the ethics board at HAR. And you just don't think about those things. It's like, how do we solve the issue? So what's happening is these lenders that are doing this are getting away with it because people just don't have time to deal with it.
Yeah.
They're just trying to, like, we got to get through this. Like, what's the next step?
Right.
And it's unfortunate because it really is putting people's livelihoods and money. It costs everybody money.
Yeah.
And it's not fair.
Yeah.
It's not fair. But what happens is it's those things that little by little, layer upon layer, give those companies a bad name.
We find that a lot of those companies, and what it is, the other thing that I see is that those customers are pretty much those lenders are pretty much one and done with those customers. Because it's not like you're going to get repeat business 30 days. Like, it's not like a Best Buy where you're going to go in and buy something today and they want you to come back, next week and buy something else. And every time that you think about something electronics, you want to go to Best Buy. How frequently does a client repeat with you?
Oh, with me, often. We have
a
clients.
buyer. No, I don't mean like a referral from an agent or something like that, but an actual
a
buyer.
Yeah, no, we get. Any given month, we get 10 to 15 past clients that call us or refer us their friends.
Okay, so it's a lot of referrals, not necessarily that one client.
It's a mixture.
Because how often does the person buy a personal residence?
No, but sometimes they refinance. But I've got 3,000 past clients.
Correct.
So, as your database grows, someone is going to need something.
Yeah, so 10% of those a year refinance. You've got 300 new clients that year, right?
Or buy a second home, or they might want to buy an investment property, or they've got stuff that's going on. So. I think that we definitely are concerned with, we're 100% referral, so
Right.
we're definitely concerned and worried about how the transaction goes. But I think that something, if you have had a bad experience, I encourage you to, with that lender, put something online. People do read reviews. And so if, give them a 1 or a 2, or if you got slighted.
Where's the place to give reviews on mortgage companies?
I think that the Yelp, the Facebook, the
Got it.
Google, I think those are the main main three.
The Google, that is a great website. I think it's going to catch on.
Google Plus and all that.
No, just google.com.
Yeah.
That's
we're starting
that
to
website knows so much.
We're trying to up our SEO on that. We just subscribed to this program called oh God, I can't think of it right now, but I know that my girls are setting it up at the office, that it's going to make sure that we really get more and more reviews and surveys and post all that stuff, because it really, really does matter.
It does. It really
People
does.
are really reading reviews. So I would encourage you, back to tie it all together, when you're shopping for a loan, there is more to think about than rate.
Yeah.
Because if you can't close on time and it costs everybody more money and time and moving twice and all these other things that are involved.
We closed on a house yesterday, and it was supposed to close last Monday.
Yeah.
We get down close to closing. We get down 2 days before closing, and they hadn't verified employment. And then when they did verify employment, they go, oh, wait, he's only been in his job for 51 weeks, and he actually has to have 52 weeks on his job.
Oh, you're kidding me.
No.
Yeah, that's a little ridiculous.
Isn't it?
Like, we would have made some exception for that.
Right.
Yeah.
Yeah, so they said we actually have to delay it a week so that he can be 52 weeks on his job. And I'm like, yeah, this is crazy talk.
There was something else going on. Like,
Oh, yeah.
I've never heard that. And I close 200 loans a year. Like, I've never had that 1 week happen.
Yeah.
Ever. Like, you have that happen when it's like, it's a foreclosure,
Sure,
or
right.
you got to be 3 years from the
Correct.
foreclosure date, and it foreclosed on, October 13th. And so you got to wait till the week after to close. But for the job, that's silly.
Hey, you're listening to Right Path Real Estate Radio. For all your mortgage needs, you need to give jennifer.legacymutual.com an email and 713-579-3600 a call. Thanks for coming in.
Yeah, you're welcome.
All right, great.
Our 2 months are up?
Yeah, right.
Our two minutes?
Yes.
Awesome.
Mike's off.
She's a brick house. She's mine. Oh.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.?
Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Hi, Clint Coons here, attorney
Hey, Tom.
and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com.
Hey, Tom.
For a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
This is Jason Bible with Right Path Radio. Look, if you're new to real estate or you're experienced and you just want a little help with wholesaling, flipping, rentals, you really need to get on the right path. So why should you listen to us? We take the confusion out of real estate investing. We make tailor-made plans just for you. Just like not every house is the same, so why should your investing plan be the same
I'm here.
as every other investment? So listen to our show, Right
Was I just a little bit late or no?
9 a.m.
Yes.
Oh, did you do an extra commercial?
Yes.
Sorry. You're so good.
This is Business 1110.
All right, here we go. Hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. I have to say, I'm so excited about our message that if you compare single-family real estate to any other investment, there's really just no comparison. I mean, I've met people before I've met probably in the last 20 years, maybe 200 people that wanted to be day traders. Because, man, it's the easiest way to make money. And you talk to them, they're really excited when they get started doing it. But after they've been doing it for even a year, I mean, I've known people that like that full-time, that was their job, sitting down at a desk in their home. They wanted to work from home. They wanted financial freedom, all that kind of stuff. And, when they measure their performance over the ups and downs of a year, what they'll tell you is, yeah, we made some money, and then basically in a day or two, it's like took them 6 months to grind out this profit. And then in a day or two, of just the market going against you, they lost all that margin and maybe a little bit more. And so to me, it's like, if you've ever known a guy that's claims to be a professional gambler, I mean, because to me, the trading in the stock market is about the closest thing to a professional gambler that there is. And trust me, I've met, had an opportunity to meet, a brother of one of the top 5 professional poker players in terms of all-time money earnings ever. And you would think that, hey, if there was a way that, that it was in the genes, so to speak, or, that your brother would teach you how to do, what it is that he's doing, that this guy that I knew was actually flipping a house here in Houston. Fast Track did the remodeling for him. But just in talking to him, it's like, hey, my brother's been able to do it. I just didn't have the same kind of passion for it. I tried it for a while. I made a little bit of money. Then he lost a little bit of money. And it's just this up and down. But basically, he was like at a break-even phase. And I found that, for day traders, it's the same thing. Well, then I look at, what about people that have invested in 401ks and IRAs? And I've been doing this kind of like very informal survey, just saying, hey, you have a 401k, right? Yeah. About how much do you have in your 401k? And then they share that. I'm like, hey, I promise I won't share it with anybody. Then I say, well, what's it invested in? And there's this pause. And then the pause gets a little bit awkward and uncomfortable. Not for me, for them. And they're like, I don't really know. And I'm like, wait a second. I mean, you're a smart person. You're grinding it out. You're doing well in your job. I mean, imagine you did a lot of research on the company that you work for before you ever went to work for them. But you make money from the company that you work for, and you don't do any homework on the companies that you're invested in. And then I start playing this little game. I say, I want you to play a game with me. And I go, all right. Most people like playing games. And I say, imagine this. Imagine you have a machine shop that's for sale. And I had one time, this person said, what's a machine shop? And I'm like, okay, well, let's back up. And this particular person happened to be in website development. And I said, okay, imagine that there's a website development company that is making $1 million a year of net profit. And the owner is an absentee owner. And so the owner, let's imagine, lives in the Bahamas, and they never actively are involved in the running of the website development business. But it makes $1 million a year of profit for the owner. So in other words, the owner got the business up to the stage. If you know anything about Robert Kiyosaki's book, there's the S quadrant, which is self-employed, there's the E quadrant, which is the employee, there's the I quadrant, which is an investor, there's the B quadrant, which is the business owner. Difference between a self-employed versus the B quadrant. In the B quadrant, you can actually leave your business for 6 months or more, and it can run itself by itself, right? So imagine he's in the B quadrant. He's in the Bahamas, enjoying the Bahamas, whatever that goes on there. His business is running itself. He's got marketing people. He's got management people. He's got sales people. He's got, operations people. He's got website developers. He's got, client base, customer service. All that runs without him. Now, you're in the website development business. Let's say that you want to grow. You can grow either through acquiring new customers, sales and marketing, or internal growth, or you could buy another company. And I said, would you pay $1 million for that? And they said no. And I'm like, well, first off, let's set up some rules for this game, right? Don't think about the fact that you can't stroke a check for $1 million, because that oftentimes we limit ourselves with our own limiting beliefs about what's possible based on our current circumstances right then. Because really, what if it's a business worth $10 million and it was for sale for $1 million? When you go, well, first off, a lot of people go, well, that would never happen. Yeah, okay. For you, it never will, because you'll never look for an opportunity like that. It's the reason why, we bought a house that's probably worth $80,000 if it's all fixed up. I'll be all in on $11,000 worth of repairs. We bought the house for $9,000. I mean, by comparison, isn't that kind of the same? And it's like, well, that's just not possible. Yeah, of course. And because you say it's not possible, you believe it's not possible, and it will always, the world will show up to align with your belief system. So I asked this person, I said, okay, so just imagine, forget about what you can afford, but if you had the money, would you stroke a check for $1 million for a business that's making $1 million in net profit? Again, you're going to have to do your due diligence, have to set all of that aside in the game, just understanding that we're just going to accept that the facts are the facts. Of course, trust but verify, right? Later, if it were a real scenario, you would have to verify all the information. But assume it all checked out. You checked all the boxes, all of it's true. Customers are really there. Employees are really great. Employees are going to stay after the purchase. Owner's going to have a non-compete. He's really going to retire. He's not going to interfere with the business. He's not going to steal anything. All of those kind of things. All of those gotchas. We check all those boxes. Would you pay $1 million? And this website development business owner said, yeah, I'd pay $1 million. I go, okay. Would you pay $2 million? I got a million. Would you give me $2 million? $2 million? I'm not a very good auctioneer. So, yeah, I'll give you $2 million. I mean, in 2 years' time, just taking the net profit, you've added $1 million to your income in just 2 years. Assuming that you maintain, customer client relationships, all that kind of stuff. Would you pay $3 million? Well, yeah, probably. What about $4 million? Yeah, I guess I would. What about $5 million? And I keep going up and up and up. It's amazing. I've done this in front of a group of people, like at one of our weekend events. And it's almost like I'm having this auction. And people that are financially savvy, they go, yeah, I'd pay $5 million. Because, if paid $5 million, that's a 20% rate of return on your money. You double your money in only 5 years. I mean, you get all your investment back in 5 years. That's a 20% rate of return. And so a lot of people can't put price with rate of return. If I say, hey, if I could show you an investment, give you 20% rate of return, would you be interested in that? Oh, everybody say yes. But if I say, hey, would you pay $5 million for a business making $1 million a year? They're like, I don't know. Most of the time, people get caught up in the size of the number. Would you pay $5 million? We're like, I don't have $5 million. I can't do that. And like, people don't know how to raise money. They don't know how to fund it. They don't understand banking. They don't understand private lenders. They don't understand any of that. So they, with their own limiting beliefs, because they don't know how to come up with the money, they're like, I don't know that. It's not that it's not a good deal. It's just they can't think of how to solve that. Well, then I go beyond. Would you pay $6 million, $7 million, $8 million, $9 million, $10 million? Would you pay $10 million? Most people would kill for a 10% rate of return that was safe and secure. Because you can't get that from banks, you can't get that from CDs. Do you realize how many billions and trillions of dollars are sitting in CDs? Because it's safe and secure, it's insured by the government. People are taking less than 1% because it's safe. Can you imagine if they get 10% and it's safe? I mean, yeah, so then people will say, well, I don't know, I paid $10 million. Okay, what about $15 million? What about $20 million? If I say, hey, is Apple a good stock to own? Oh, yeah, Apple's great. Do you know that you're paying $19 million for every $1 million in net profit it makes? It's almost $20 million. It's about a 5% rate of return on because it takes 20 years to pay it back. There's a thing that you can track on any stock. Google any stock and look up the PE ratio of any stock. And that's just take the earnings divided into the price. Take the price divided by the earnings. So if it's selling for $20 million and it's making $1 million of profit, that's a PE of 20. It's selling for 20 times its earnings. It means it takes 20 years to pay that back. 20 years to pay that back. In other words, you pay $20 million for that website development company. No, heck no, I wouldn't pay that. Yet that's the average price in the stock market today. And yet, can't wait to put an extra, $100, $200 out of every paycheck into the stock market. And you go, oh my gosh, most people are so asleep. And they wonder why they retire with as little as what they have. You're listening to Right Path Real Estate Radio, 713-785-1817, 713-785-1817. Give us a call. Join in the conversation.
Mike's off.
All right.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts, Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Taxes. Just
all right,
the
90
sound of that
seconds.
word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal: helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey
You there?
remodeling of single-family investment properties.
Yes.
Whether it's
How we doing
a
on
flip
time?
Rehab or a rental rehab. No more
40
managing it
seconds.
yourself.
Okay.
No more doing the work
Cool.
yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Hey, good morning, Sonia.
If you're not
I missed y'all
familiar
at
with
base camp at the last
Quest IRA,
event.
Let me tell you what you're missing.
With the last base camp.
We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
This is Business 1110.
All right, hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. So we're talking about comparing single-family real estate investing versus any other investment. You know, so we were talking about investing in a 401k and an IRA in the stock market, how many people blindly do that, not knowing, number one, what they're investing in. Number two, what they're paying for the asset. And, you know, so many things that we buy in life. When we buy a house, we can run comps, and we know that we're getting a good value for that house. When we buy gold, we can look at, hey, there's a market price for gold that says this is what it's worth, right? Most people, when they look at buying a business, if they were to go out and actually buy a business, they would look at there's ratios in terms of businesses. But when you start talking about publicly traded corporations, there's so much money that needs to go into the market that there's not enough assets to buy, so it drives the price up. When you have more assets to buy than things to buy, then the values rise. And so right now, the average price based on the earnings of the companies, it's like the next 20 years of earnings is what you're paying for the price today. Company's making $1 billion, then it's going to have a market cap of $20 billion. That's the average. And nobody would ever buy. Imagine a gas station, makes $1 million a year on the corner of Southwest Freeway and Hillcroft. You wouldn't pay $20 million for that. Yeah, that's what people do every single day in their 401k or their IRA, and they've never compared what kind of results they would get. Now, here's what happens. Now, occasionally, that 20 PE will go up to 21 or 22 or 23. In other words, for every $1 million of earnings that business is bringing in, they'll charge 20 million, 21 million, 22, 23 million. That causes the stock price to rise, right? That's what's happened with Apple, is their PE ratio and their revenue has both grown. And so that's how the company, that's why it crossed the $1 trillion mark in terms of market cap. Most people don't realize the price that they're paying for that, though, and they wonder why it is they get the results that they're getting on the values in terms of the growth of their net income. I don't think most people have done the math of what it takes to buy a business versus what it takes to buy stock, or compared real estate in all the different ways that you make. You know, if you get stock, there's really only two ways to make money. Either stock gives dividends or it has to rise in value. Those are the only two things. And if you tell me, hey, is the stock going to, if I buy 1,000 shares of Exxon today, can you tell me for sure if it's going to be up, down, or sideways a year from now? And no one can give me, this. Like, I don't have a crystal ball, and neither do I. Here's what I can tell you, is that historically, when I look at any period of time in real estate, if I bought at a high point, bought at the tip of the market. Now, there are exceptions to what I'm going to say. And one of those exceptions is, I'm not talking about $1 million houses. I'm not talking about $700,000 houses. I'm talking about houses that are below the median home price. I'm talking about houses that are below replacement cost. In other words, I can build a house right now for, let's say, $110 to $125 a foot from the ground up, not counting the cost of land. But I can buy land and house for $50, $55, $60 a foot. I can put $20 or $30 a foot, and I'm in it for $90 a foot. I can't buy the land and build a house for $90 a foot. Just can't do it. It's just not possible. So it's below replacement cost. Now, if I buy any house in that price range, below median home price, below replacement cost, and I pay at the tip of the market, and then the market crashes, within 5 years of buying at the tip of the market, at the top of the market, there's not any 5-year period of time that I can go back and look at any of the charts and see that I'm not selling 5 years later for more than what I bought it at. I can't say that about stocks. There's individual stocks that could be totally out of business. But there's not in any individual house that would be worth zero. I can't go to zero like I can. A company can go bankrupt. It can go to zero. A house can't go to zero. The only way it could is if it burned down, but then you have insurance that protects you. So imagine that if you had insurance that you could buy, and yeah, you can. It's called options. You can buy options in the stock market, but that reduces your returns. There's actually 6 ways that you can make money in real estate. 5 plus a bonus 6th way that we teach at our free event. What I'd like you to know is you can go to our website. You can register for our free event. We're going to do one today at 6 o'clock. But Tom, how much does it cost me to get here? Well, it depends on how far you're coming away. If you're coming from Seattle, it might cost you a little bit. The actual event itself won't cost you anything. But here's what I want to ask you. There's a cost for coming here. But what's the cost of not coming? What's the cost of not knowing financially what the best investment vehicle in America today? In fact, you don't have to take my word for it. Back in 2013, 2014, I'll have to go back and get the exact quote date. There's this website I'm going to go to right now while I'm talking to you guys. I don't know if you've heard about it. It's google.com. It's amazing. It's amazing. The Googles. So Warren Buffett, single best asset class in America, he said is a single family house. I'm going to just put in single best asset in America. So he said that the single best asset class in America today is a single family house. In fact, he says if he could figure out a way to manage it, he would go and buy 100,000 houses. Now, I don't know about you, but I've done the math on a single family house. If I bought a house for $150,000 and I paid retail, versus I buy Exxon stock and I buy 1,000 shares of Exxon and I pay retail. What I know is I can't get leverage except for margin on the Exxon stock, but I can get a 5-to-1 margin on a single family house. Means that I can buy a $150,000 asset and put 20% down. I can do that all day long. Now we can either show some other strategies. That's a simple strategy where you just put 20% down, finance the other 80%. Most banks will do that, every day of the week, except for holidays because they're closed on holidays. But you put 20% down, I'm only in for $30,000. I've got an asset worth $150,000. Now, typically a asset like that, is going to rent for about $1,500 a month. You're going to have about $1,050 a month in a monthly payment for principal, interest, taxes, insurance. We don't recommend that you manage houses yourself because that's one of the big, things that people say, well, I don't want to ever own a rental house because I don't have to worry about tenants and toilets and taxes and, all that kind of stuff. And I'm like, I don't either. That's why I have a management company do all that. My management company charges me $85 a month for any house that I want to manage, whether it's a $2,000 a month rent or whether it's a $200 a month rent. I don't recommend renting $200 a month houses, but they charge the same $85 a month regardless of what the rent is. A lot of people go, oh, I know management companies, and they charge 10%. That means it's $200, and that's just taking all your profit. No, it's not. $85 a month, flat rate. Whether I have an expensive house or I have an inexpensive house, it's the same $85 a month. So if I take the $1,050 in principal, interest, taxes, and insurance, I add a $85. Let's even round it up to $100 a month. I'm at $1,150. Let's round that to add another $50 a month in miscellaneous expenses. I'm at $1,200 a month. But I'm bringing in $1,500 a month, so that means I get $300 a month. Now I can take that $300 a month and I can save it up and reinvest it in another house. I can take that $300 a month and I can go spend it. I can set it aside for a rainy day fund. That $300 a month, that's a 12% rate of return on my $30,000. Most people would be happy with a 12% rate of return. But it gets better. That house in Houston has been averaging about a 7% rate of appreciation for a long time. Dr. Dotzauer says it's going to continue for a lot longer. What if you get a 7% rate of appreciation on a $150,000 asset that you own for $30,000?
2 minutes.
That's a 5-to-1 leverage, which means you get a 5-to-1. Let's take it down. It's not even a 7% appreciation. Let's take it a 5% appreciation. That gives you 25% rate of appreciation based on a leverage. If I take 25% on appreciation, I take 12% on cash flow, that's a 37% rate of return. Show me another investment that's backed by a tangible asset. I had lunch with somebody yesterday, and he said, he goes, yeah, I own a Bitcoin, one Bitcoin. I go, can you pull it out of your pocket and show it to me? He just laughed. He goes, no one's ever seen a Bitcoin. You see pictures of them on the internet, and those are they look to me like, Chuck E. Cheese tokens that have been photoshopped. Essentially, you're buying a Chuck E. Cheese token for a gazillion dollars. Who really knows what it's worth? Just basically somebody says, oh man, there's a limited supply of Chuck E. Cheese tokens. Let's make them worth a gazillion dollars. Yeah, I said that right. Because it's a made up number, right? I mean, anything can go from, buying a pizza with a fraction of a Bitcoin 10 years ago or 5 years ago or when it was that first transaction happened to, something being worth 10 or 20 or 30 or $40,000 down to like 800. And I just asked the question, why? Why did it go up? Why did it go down? Nobody knows. Nobody knows. Strictly arbitrary. It's not based on anything. You're listening to Right Path Real Estate Radio, 713-785-1817. Don't hesitate to give us a call. See you on the other side of the break.
Mike's off.
Thank you. Be right back.
Okay.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
One minute.
Okay.
You need a lender that moves fast at the speed of a jet to fund your investment properties. Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
This is Business 1110.
Hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. We teach practical real estate investing. And one of the things that I get excited about is comparing single-family real estate with any other type of investing in the marketplace. I would love to get someone online or somebody here in the studio that, is a trading person, a full-time day trader. I would love to get them online in the studio, and let's talk about day trading versus real estate. or I'd love to be able to talk with someone. You know, I've compared single-family real estate, buy and hold investing, to commercial real estate. And right now in this market, single-family kicks commercial's tail. Now, what I can tell you is I see a train a-coming where in the next 2 to 3 years, maybe a little bit sooner, commercial properties below $30 million are going to be some incredible deals. Right now, not so much, but soon. Now, multifamily. I compare single family versus multifamily. And there's a group here in town that teaches, oh my gosh, now is the greatest time in the world to get involved in multifamily, blah, 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 blah. Guess what? They're trying to sell you on multifamily deals. Actually, they're selling you the education on how to do multifamily deals. What I'll tell you is there's no multifamily deals right now. Again, there is a crash a-coming. For commercial and multifamily, I believe it's more like buying a business, and you have to understand what is it you're paying for that business. Again, going back to the stock market, would you pay $20 million for a $1 million a year business? And the answer is, for most people, no. Yet they do it every single day. But they don't really realize that that's what they're doing. They wouldn't consciously make that choice, but without choosing, without being educated, they're doing it in spite of, if you ask them the question, would you, they would say no, but yet they're still doing it. Same thing is, most people don't realize what they're buying, really what they're doing right now. Anybody buying multifamily right now is really speculating. And I think it's kind of comical, truth be told, that as far as I know, the person that's teaching it here in town, not even invested in multifamily himself. Story I've heard is, he's transitioning from Class C to Class A, just looking for a deal. That's like me saying I'm looking for a deal on a brand new McLaren, brand new, fully loaded. I'm looking for a deal, on a, if I can get a McLaren, brand new McLaren for $50,000, get me a deal, I'll buy me one. I'm just looking for one. There's no deals on McLarens. There's no deals on Class A multifamily. It's crazy. It's intellectually dishonest is what it is. So what I want to tell you is we teach what we do. We buy single family to flip. We buy single family to wholesale. We buy single family to buy and hold. The best of those in terms of building wealth and income. Wholesaling and flipping will bring you chunks of cash. Like a job can bring you a chunk of cash, brings you bonuses and chunks of cash. And we teach that as a business. Seconds. We prefer to teach you how to build long-term wealth and income, how to get 35, 40% rates of return or more safely and securely long-term. If you want to find out more, go to rightpathrealestate.com. Register for our free event. That's right, free event. Tomorrow I'll be in the studio. We'll be talking more about comparing real estate versus any other kind of investment. Challenge me. Give me a call, 713-785-1817 tomorrow. Thanks for listening, guys. I'll be back in the studio tomorrow. Have a great day.
All right, mic's off. Have a good one.
Thanks, you too.